The winner is probably going to be a small group of people. It's going to be OpenAI. It's going to be maybe Anthropic. It's going to be like these large companies that will raise a ton of money and have a ton of GPU capacity to basically build the best and build and train the best models. I think that that's more of a zero-sum game than most people think. And so where I think becomes interesting is like building on top of these platforms, people who can sort of like skin these models in a way that my grandmother could use, for instance. Like to me, that becomes like very interesting.
All right, guys, bang, bang. I have Praying for Exits. Yes, it's not his real name, but he is one of probably the most interesting early stage investors in tech right now. We're going to do a little round robin. I figured I'd just throw out a couple of industries and we could talk about what you're excited about, what opportunities you're seeing, and then maybe companies you're not seeing, but you wish that someone would go and start. We can start with defense technology. Obviously, Anduril is kind of the grill in the room. People have gotten very, very, very excited about what they're doing. But defense tech is not just Anduril. There's tons of other companies. What are you excited about in that space?
Yeah, I think that and again, thanks for having me, Pomp. I think that what's really exciting is, and I guess like it's kind of a fine line here, but the macro picture has kind of shown that defense technologies are increasingly becoming more important in maybe our day-to-day lives in a way that most people in the Valley probably didn't think that they would 20 years ago. And I think what's really interesting is there was sort of a lot of brave people like Palmer, the guys at Shield AI, who kind of like pushed the envelope on developing defense technologies. And for all intents and purposes, this is what Silicon Valley was built on. You have Lockheed and Raytheon and all of these early Silicon Valley companies taking all of the best talent out of the Valley and building interesting things. I think we're coming back to a place where that's reaching prominence again. I think the shift away from, defense technologies being sort of like a bad word in the Valley to a place where some of the most innovative and interesting people are spending their time has been one that has been really quick. And I think the backdrop of the macroeconomic picture has kind of sped that up. And so what I'm seeing that's really interesting right now is obviously there's a bunch of offensive and defensive technologies that are super interesting and that have becoming a lot more pushed to more sort of the center of the cultural zeitgeist, as it were, through people like Palmer. But what you're starting to see is a lot of these ancillary technologies that are supportive of some of these like larger companies like Anduril. There's one company that I just did that's like infrastructure supporting defense. There's another one that I'm doing that's building a new drone platform. There's another guy that has become quite popular on Twitter who's thinking about using weather as a weapon. I think that there's all of these really interesting young kids who are leaning into defense as an interesting industry, and it seems really exciting. There's a lot of innovation and there's a lot of new things popping up, and it's a really interesting place to play.
So defense is one of these interesting industries where you've got to understand kind of what is our current capabilities, what is the threats that we may face, offensive and defensive, kind of capabilities. And then also how likely is it that one of these crazy technologies can actually be built, right? And so if you take Anduril as an example, they're basically like, hey, we're just going to build cool shit. Right, it was kind of like an initial pitch that's going to go solve some of these problems. Now, you look at the team and you've got some of the best technologists of the last few decades. And so it's like, okay, high odds or probability that they're going to be successful. When you start looking at like using weather as a weapon, which I'm pretty sure I know exactly which company you're talking about, it makes sense that, okay, if you could do A, B, and C, then yes, you will be able to have this new capability. How do you underwrite? Can this group of people actually pull it off? And what is the technical feasibility of a said technology?
Yeah, I think what's interesting about defense is you kind of have to underwrite it in two different ways at once and try and get a clear picture off the back of that. I think the first way that you have to underwrite it is, to your point, is this technology viable? Is the person who's building this technology the person who can kind of get this to scale and make it useful within the context of the government or private enterprise? And then the other aspect of it that is like a lot more difficult to underwrite, and I think historically has kept people from investing in defense more, is how do you underwrite the likelihood that the US government plays ball, right? And I think that one of the, it's never really a place that you want to be in sort of like investing is the US government on my side with this one? But increasingly, I think that it's important, at least for people, or I think that it's underrated, like an underrated endeavor in trying to understand this better in people who just start out with defense, is that they don't really have a good sense of how the government machine works, how contracts are, won and lost. how lobbying works, how all of these different things affect the outcomes of your investments. And I think that people like Palmer and somebody like Joe Lonsdale at Palantir, these guys kind of kick the door down and kind of set the sort of framework for how to do it. And so I think that now more than ever, it's a little bit easier to underwrite, something like how does weather work in a weapons system, just because, those frameworks were established by companies like Palantir and Anduril. But over time, I think that this becomes a lot easier to understand, whereas right now it's still a little bit obtuse, and I think that there's still value there in understanding what works and what doesn't in that context.
On defense tech, it also seems like there's two other components that are driving, kind of a huge influx of successful companies. One is like tech figured out how to settle the government, and now that's like a playbook, and people kind of understand how to do it. And then two is there is like I think people are calling it the Palantir Pack, right? There's like people who went. They're part of a successful company. They start to spin out and start more companies. And so like success begets more success. Some of that is talent. Some of that is the network that gets built out so you have people to recruit. Some of that is the playbooks. Talk a little bit as to like how you start to really understand like, okay, is this a 2-3 decades long trend that we're about to see here that really kicks off because some of those people kicked down the door. And now there are kind of playbooks and networks that are established?
Yeah, I think that you see it in kind of different industries with sort of high bars to disintermediation. I think the early great first example of it is sort of PayPal. Financial services were these sort of Byzantine, very difficult process that had a high bar to entry back when Peter and those guys tried to do it. And I think that, defense is now this new one where sort of the bar has been quite high, like been raised quite high, or was quite high originally. And now, to your point, the doors have been broken down a little. And what you're starting to see, especially in Los Angeles, I think, in South Bay, there's a Cambrian explosion of people who used to work at the large defense companies. So whether it's Anduril or, I'm not saying SpaceX is a defense company, but aerospace defense, they kind of exist within this paradigm of like a new company that's sort of breaking things and sort of paving the way. And then they see all of these interesting pockets of value that other people from the outside looking in might not see. And then they tend to start companies around them. And so, there's like, for instance, there's a really popular deal that was just done not too long ago that's focuses on wire harnessing, which is running wire cables through all of the hard tech, that's happening out here. And so, I think there's a Cambrian explosion of interesting things happening in Los Angeles specifically to that point that you made, which is, these companies have great employees that work there early, find these pockets of value that nobody are really thinking about, leave and start new companies. And you're starting to see that at Anduril, you're starting to see that at SpaceX. People who've been there for 5-10 years, vested all their equity, now have this, new idea that they want to pursue, and they're going out to start a company around it. And, it's one of the hottest sort of sectors in our market that we play in. And, there's a bunch of like really young sort of sub 30-year-old kids who are building really interesting things right now through that context.
Let's talk aerospace as a second industry. There is some overlap with defense, obviously, but there is a whole sector of it that has nothing to do with defense. What are you seeing in the aerospace industry that's exciting or areas of opportunity?
Yeah, so I'm an investor in companies like Varda, do some work with the SpaceX guys. I think that aerospace is a little bit earlier along the defense curve, or a little bit less developed than the defense curve right now. And why I say that is, there's a ton of satellite companies coming out, satellite bus companies, people like Varda who are doing interesting things in low orbit space. I think that in the way that defense wasn't necessarily clearly established on like what are the platforms that have scalability over the long term, I think aerospace is kind of reaching that moment right now. You've seen a bunch of companies that have raised large amounts of money to launch satellite buses or do these things. To me, it's very difficult to tell which of these platforms ends up with high scalability, because a lot of these things, like Varda, for instance, Varda is making factories in low orbit space. Like the total addressable market for that is probably quite large, but I think that market is probably pretty uneducated on how to utilize that technology to its max potential. And so I think that we're still in the learning curve section of aerospace specifically, where, a bunch of people are trying things, they're raising a bunch of money around it, sending things into the space and, or doing things like Mach, or like, doing electric planes and all of these different things. And I think it remains to be seen which one of these is the sort of paradigm that really becomes valuable from a monetary standpoint. But I think that there's a bunch of really interesting people trying a bunch of really interesting things in that space as well. And the overlap between defense and aerospace seems to be tightening quite a bit, or at least returning to where it used to be back in the, like Howard Hughes kind of days. And so, yeah, I think there's a bunch of really interesting stuff happening there right now. And it's a place I spend quite a bit of time.
When you look at the aerospace industry, it seems like there's a technology component. I think of like Boom Supersonic and some of these companies that are really trying to push what is possible. I think Varda's in that category, et cetera. There's also a layer of like regulation that seems to be a little bit more onerous than maybe some of these other industries, maybe even more so than like the defense industry. How do you think through a team and kind of the dynamics of like, hey, we need some technologists. We need obviously people who can kind of manage and do operations. Do we need people in the beginning who know how to work around regulation and kind of interact with these regulatory bodies? Or is that something maybe investors could help with and make it a little bit easier for some of these teams as they're really focused on kind of going from 0 to 1 on the technology side?
Yeah, I think that it either has to be somebody on the team or an investor. I think that in the same way that you have to build something from the ground up very intentionally in any industry, aerospace is one where you have to do that with a special amount of care. I think that, to your point, people like the FAA and some of these other 3-letter industries are, very difficult to deal with. And I think that they're extremely difficult to deal with retroactively, unless you're building proactively towards a place where that they'll play ball. I think that you run the risk of basically gambling on whether or not something will work. Well, not even from a technical standpoint. And this kind of goes back to understanding both technical and sort of just sort of like government feasibility. I think that you have to start building from the point of view of like, hey, I know exactly what is going to work, or at least have a high confidence interval of what these people are going to be willing to see. And if you don't sort of build it from the ground up in that way, I think that you run the risk of, 2 years down the line, you have a technology that's technically viable, but not practically viable. And so I've seen a lot of companies raise a bunch of money and build these technically beautiful things. But then they get to the point where they have to sell it to somebody and, it's for one reason or another, blocked or pushed down or, slowed down. And that can be kind of like a death knell for an early stage company. And so I always recommend to just build with the intention of like, hey, we are interactive with, these regulatory bodies from the very beginning, even at the pre-seed. And so you have to build the company in that way so that, 2 years down the line, you don't have to sort of reverse engineer how to make something successful instead of, building towards it.
That makes sense. Artificial intelligence is another industry that seems to be getting tons and tons of interest right now. One camp is artificial intelligence is going to change the world. It's the most disruptive technology since the internet. Another camp is like, you guys are all idiots, and this is the most overhyped, overblown thing in the history of technology. Where do you kind of fall on this? And how do you tell? Maybe both are true, and you got to kind of sift through the noise to find the companies that aren't going to be overhyped and will actually create value.
Today's episode is brought to you by Trust and Will. I've gone through a number of different changes in my life over the last few years. I got married, I had a kid, and I had to start thinking about how could I ensure that my wife and my child would be okay if anything ever happened to me. That's where trust, wills, and estate planning come into play. Now, most people, what they do is they get introduced to a friend, an uncle, or someone in their local community. It tends to be someone who's really expensive, a lawyer, an accountant, or somebody who does estate planning, and they just simply are using a one-size-fits-all template and just telling you, pay me thousands of dollars, and I'll use the same thing for you as the guy down the street. But that's not what Trust and Will does. They have a trusted online estate planning product that starts as low as $159, which allows you to now protect your legacy from the comfort of your own home. Leverage their excellent customer support, available via phone, email, or chat. They have thousands of 5-star reviews and a rating of excellent on Trustpilot. It takes most people 20 to 30 minutes to complete their estate plan with Trust and Will. And not only that, but if you go to trustandwill.com/pomp, you'll get 10% off. Plus, you'll get free shipping of all your estate planning documents. So go to trustandwill.com/pomp and make sure you get an estate plan in place. Whether it's for you or one of your loved ones, having a trust and or a will can literally be the difference between someone being taken care of and someone not. Go check them out today at trustandwill.com/pomp.
Yeah, I think that I'm not like an absolutist in that way. I think a lot of people on the internet seem to be, though, in the sense that, most people either think that this will be the greatest thing that's ever happened to us in our lifetimes, or it's kind of this overhyped space that maybe is like akin to, like how people talk about a crypto, or to me, it seems a lot more like, and I have nothing wrong with crypto. I think it was a paradigmatic change. I just think that it got kind of overrun by sort of people who, didn't have the best interests of the platform at heart. But I think that it's clearly a paradigmatic shift that's going to change a lot of the way that people, conduct business. I don't know. I think that like the application layer is what's most interesting to me, but it also seems the most scary because anything that you do in the application layer seems as though it can be disintermediated by OpenAI at any point. And it seems like there's been a variety of companies that seem to go out of business every single day that OpenAI releases a new update. Like for instance, 2 or 3 days, maybe earlier this week, they released the PDF reader, and they released OpenAI Voice. And each time they release one of these things, like 25 startups die, or at least are forced to sort of aggressively pivot. And so to me, I think that like, the model layer, it's going to accrue to like a couple of large players, in my opinion. It's just very tough to keep up to their, GPU capacity, their talent levels, their ability to hire. That seems like pretty strong moats, at least on the model side. But I think at the application layer, there's a lot of things that we're probably not even thinking about that are going to increasingly be useful, whether it's on the generative side, whether it's on the LLM side. And so to me, what becomes interesting is like, it seems like another app store kind of moment where it's like, it's very clear the app store is going to usher in, a new paradigm of like value. But what are the apps on the app store that end up working? What are the Airbnbs? What are the Ubers, et cetera? And so I think that right now we're in the very early innings of like figuring out what are the next great quote unquote apps built on, the platform of AI.
How do you think about where value ends up accruing, right? Obviously, there are these very large companies that seem to jump right in. I think Adobe was like a perfect example.
Mm-hmm.
Generative AI comes out. All of a sudden, there's like 20,000 startups who are all like, oh my God, we can do generative AI and photos. And here's my twist on this. Some investors poured capital into these companies. Other investors were like, I don't know. Adobe comes out and they're like, well, we have distribution. We already have a great business. And now we're going to take these same technologies and we're going to roll it out. In those scenarios, there's a lot of people who are like, oh, Adobe just killed, hundreds of startups. We recently saw this with ChatGPT and OpenAI, and they launched the PDF, kind of the ability to communicate back and forth. I saw one of the founders talking about, well, actually, he's not going to kill our business because we have all these, unique features. When you're investing, how do you understand opportunities, but try to depict, do the big guys come in and crush these, smaller companies by just flipping on these features, or can these smaller companies use the same technology, create actual moats? And in the early days, you're looking at a pitch deck, you're having a conversation, like there's not much to evaluate. And so what's your process to unpack that?
So I think that like my personal perspective is that at the model layer, it's probably the winner is probably going to be a small group of people. It's going to be OpenAI. It's going to be maybe Anthropic. It's going to be like these large companies that have raised a ton of money and have a ton of GPU capacity to basically build and train the best models. I think that that's more of a zero-sum game than most people think. I think that it's going to be very difficult to compete with somebody like an OpenAI on that just at scale. And so where I think becomes interesting is like building on top of these platforms. And where I think the moat becomes useful is like, what's a good example of a company that has a great moat? Maybe like Midjourney, right? It's like Midjourney is built on top of a bunch of models. I actually don't have the specific models that it's built on top of, but it's clearly like an application level sort of thing that becomes super useful to people. And I think that even though something like OpenAI comes out with something like a DALL-E 3, which is very, very interesting, very useful, I think people still tend to lean to Midjourney because, whether they like that specific art style or whether they find the process to use Midjourney, super useful, and they can prompt the models in a way that feels natural. I think that there's going to be a lot for consumer usability. And so I think that people who can sort of like skin these models in a way that, my grandmother could use, for instance, to me, that becomes like very interesting, and creating like a bunch of different sort of application level technologies that just make the average person a little bit more useful with these technologies seems to be the initial note that becomes interesting. I think it's very hard to compete and say, hey, we will train the best models with the most parameters I think that is a losing game that probably the big guys will continue to win. And I think that it becomes interesting. What becomes interesting is not trying to build the next app store, but really trying to build, the next Robinhood or whatever.
Let's talk about the state of venture capital today. You've very focused on the earliest stages. How do you think about check sizes and valuations where we are at the moment?
Yeah, what's interesting, and I'm sure that you've seen this as well, and feel free to chime in on your own views on this, but I think that what you're starting to see is seed is becoming quite a lot more competitive. And I think that it's because a lot of these later stage funds have realized that it's pretty hard to do an A. It's almost impossible to do a B. And then anything at growth is like, you have to be really, really careful. You're probably putting a bunch of structure in it. You're, protecting your downside risk, all of these things. And so it seems like the mid to late stage game has dried up quite a bit. And you see a bunch of these firms, $80 billion AUM firms now trying to be competitive at seed, which is kind of like a new development. And so obviously you're seeing seed valuations push down. You're seeing sort of later stage valuations normalize a bit. And so it feels like there's, a war zone kind of happening at seed. It feels like every single person is chasing every single hot deal. The biggest funds in the world are spending their time on $2 million checks. It seems super, super hyper competitive at seed right now. And I think that's trickling down even into pre-seed. Pre-seed seems to be getting a lot more institutionalized. Before it was a bit of the sort of wild, wild west. People were just kind of, doing what they were, just kind of like firing off checks with valuations that were just kind of like done back of the napkin math. And now it seems a lot more structured, and like a lot more people participating in a formulated way. So I think that I spend most of my time at pre-seed and seed, and yeah, it feels like to really win the best deals, you have to be very articulate and about real value that you can provide, rather than, hey, I'm a seed investor and there's not many of us, so you better take my money until you wait for the bigger guys to come along.
When there is this more competition, I think it just forces people earlier and earlier. And one of the things that has been happening simultaneously is that there are more and more individuals who can now write checks similar to what we would have historically called a super angel. And so you almost get this kind of weird dynamic where you have individuals who have become the sizes of small seed institutions, and they're able to write checks at the size and velocity at those institutions. So it begs the question, who ends up winning on brand, right? The individuals versus the actual institutions themselves. You operate under a pseudonym. And so you almost are living kind of in this like third bucket. How do you just think about, okay, somebody's starting a company. It's obvious that there's a higher probability of success. It's not about picking. It's all about access. Mm-hmm. What are the pros and cons of the individual versus the institution versus maybe this like pseudonym, which kind of blends the two?
Yeah, and I think that's a great question. I think that what you're increasingly finding is the most discerning founders, even at the institution level, are still pursuing specific people in those institutions. And so it's not like, hey, I want just Sequoia, but it's, hey, I want Sean McGuire at Sequoia because Sean, worked at DARPA, has all these connections. I think that increasingly the advice that you're seeing these young kids get from people who've done it a few times before is, hey, make sure that the person within the institution that you want is the person that is going to be leading this deal and doing this deal. And I think that with that in mind, the individual is kind of prioritized in a lot of ways, even if they have the platform of a large institution behind them. And so to me, what's great about being pseudonymous is the reason that I've done the pseudonymity thing for so long is because to me, it allows the only surface area for anybody to interact with to be my ideas or previous work that I've done that is knowledgeable through the lens of the pseudonymity. And so what I increasingly find is like to win the best seed deals, you have to be very, very clear on and articulate on what the value that you are providing to these founders are at a granular level. And it's not like these kind of like pie in the sky, oh, later on down the line when you're at Series A, I'm going to help you raise. No, it's like very, very practical needs that are like immediate. And so I think that the feedback loop for like who are good seed investors that provide value, whether it be HR, whether it be, you know, any of these other things, the feedback loop is much tighter than it used to be. It would used to be you invested in something in seed and you had like 2 years before the A to like kind of prove your worth as a seed investor. Now it's like, hey, great, you wired last week. Let's start grinding kind of thing. And so to me, being pseudonymous has allowed me to really just focus on the work and less so on like, hey, look at me, I went to this school, I did these deals back in a previous job or whatever. To me, that's all kind of like stupid and irrelevant. You're really only as good as your last deal that you've done, in my opinion. And so, yeah, I think that being pseudonymous allows one thing that it also does is it allows me to play in a place that is like uniquely kind of like, friends with everybody, enemies with nobody. And so I think that that's really helpful at Seed, just because there's so much to see. And so having a good network of people to parse, at least the first level of things for you is really helpful too. And so, yeah, I think that, my perspective is that even at the institutional level, the individual and what the individual value that person can provide is the most useful thing in winning seed deals. And if you can't articulate what that is, you probably aren't offering enough. So
what is the thing that you present in terms of the value proposition initially?
The thing that I present in the value proposition initially, and I think that this is something that you're quite good at as well, is like I kind of frame it as like, hey, I work with a bunch of really technical people who build incredibly technical things. I'm not the most technical person myself, but what I am very good at doing is capturing and retaining attention. And I think that there's a few useful pillars where attention has become sort of like increasingly a valuable sort of currency in the world that we operate in. One is obviously like hiring, right? So it's like, hey, we have a really interesting company. We have a great mission. We've been well capitalized. Why do you want to come work here? How do we capture the attention of the best engineers or the best hard tech guys or whatever to basically come in and work here, leave their jobs elsewhere to come and like believe in the equity that they'd be getting as opposed to, the salary that they'd be getting. So that's one, is like, how do you capture the attention of AR, like from an HR perspective? Two is how do you capture and retain the attention of investors, right? It's like, how do you build sort of like this pedigree around yourself so that by the time that you go out and raise, your round is basically already accounted for, as opposed to you sort of going and kicking the tires on a bunch of firms and taking 6 months of a process to basically see if people are even interested. That's the other side of it. And then the third side of it is like, how do you just get attention on the things that you built? I work with a bunch of people who are like extremely technically proficient, but when it comes to getting people to care about this beautiful thing that they built, it's not their core competency. And so finding unique and interesting ways to leverage the distribution mechanism of the internet and, all of these different social platforms that increasingly playing an important role in the lives of venture capitalists and founders. It's like, how do you just get people to say, holy shit, this guy's building something incredible. I can't wait for it to come out, or I can't wait for, this to launch. I think that becomes like a really useful thing. And it doesn't seem like there are many groups. There are some, and I respect them all quite a lot, but there aren't that many groups that focus on this specific segment of it all, which is, like go to market in kind of a different sort of way. And so the value proposition that I provide is like, hey, let's capture as much attention as possible for you and modulate it into the most useful function of it to get your business to where it needs to go.
Talk a little bit about why the media landscape allows you to do this today, right? Like it used to be that you would have to go on television or talk to a newspaper reporter. You, for all intents and purposes, in the most loving way, you shitpost on Twitter and are very good at it and are able to, capture attention and drive people to take action. What is it that is different today than maybe 5 or 6 years ago that has allowed for an opportunity to someone like you to kind of slip in and now provide this value to founders?
Yeah, I think it's anybody who has a voice on the internet probably notices this, is that like mainstream media has become increasingly less useful. It's become increasingly obvious that, there's an agenda behind most things that are shared by mainstream media. And I think this kind of goes back to something we touched on earlier, which is like the individual versus the institution. I think people are increasingly more willing to believe the individual because the levers behind why an individual does something is probably a little bit more obvious than the levers of why like a large media institution might do something. So to say that you like understand, like what the purpose of a New York Times article is, like what like the editors and what the different people within the New York Times were all trying to accomplish by getting this across, that's a lot more obtuse than saying like, who is this guy or what is this person? What do they believe in? And how does that tie into my own personal beliefs? Obviously, it's not a perfect science and people can kind of like present themselves in whatever they want. But I think that like social media, Twitter and Instagram, these things specifically have kind of given people a distribution mechanism to have them understood in a way. And so, when you're spending all day on X.com and you're providing context about a bunch of different topics, I think it allows people to paint a picture of you that's a little bit more easy to understand and maybe honest than you would get from like a mainstream media platform. And so that's allowed these voices to become a lot more powerful, these individualized voices to become a lot more powerful than they used to be. And I'm sure that you've noticed it too, like how many times you've created value for yourself just by expressing your opinion on one of your various platforms. I'm sure that, what you found is that it magnetizes the kinds of people that you want towards you because you find people who see things the same way as you do, or can at least, combat the way you think in a way that seems valuable to you over the long term, right? And so, yeah, I think that having a strong individualized voice in this landscape becomes this really useful and functional tool.
What's interesting about it is most people think when they're running a business, hey, I should not say anything that will offend someone, right? Yeah. And they very much want to be kind of cautious and walk on glass. What you find is the people who are the best at it, like Elon Musk, piss off a lot of people. But he also pulls this huge magnet of talent and capital towards him. Palmer Luckey, another great example. Like we can just go down the line. There's a bunch of these people. And so in some weird way, I think my advice has morphed over the years from like, oh, you should try to build an audience to like, you should just say what you believe. 100%. Right. And like, if you actually believe it and are willing to say it out loud, like there's some degree of you're willing to defend that idea in public, which you will be shocked at how many other people believe the same thing and are impressed that you said it. And so then they will come and they will find you. Right. And it seems like that's exactly what you've been doing as well.
This episode is brought to you by Auradine. They are a brand new startup led by a number of Silicon Valley legends who just raised $81 million to build the future of internet infrastructure. You're probably wondering what that means, so let me explain. There are numerous new disruptive technologies that are being adopted simultaneously, from blockchain to artificial intelligence to zero-knowledge technologies. In order to ensure that these technologies thrive in this new world, we need new infrastructure, and that is where Auradine comes in. They just launched their first product line called Teraflux, which is a Bitcoin miner powered by the world's first 4-nanometer silicon chip technology. These air-cooled, single-phase and dual-phase immersion cooling miners have unrivaled speed and efficiency. They have superior uptime, and they leverage a brand new innovation called Energy Tune that allows miners to dynamically adjust the energy consumption and Bitcoin hash rate based on demand response needs of the electrical grids. Auradine is an ambitious company working on hard problems. I'm really impressed with them. And if you want to check out more, you can go to auradine.com. That's AURADINE.com. Go check them out at auradine.com today.
And totally. And I think that the person who like set this playbook up before anybody else and was like the most honest version of this is probably Peter Thiel. Peter has had these contrarian views for, decades now, and he's never really been shy of, like even when the Trump thing was going down, he was very vocal. I think that like Peter is a great framework for this because he has constantly spoken his mind. And if you look at Thiel Fellows, or you look at Founders Fund, or you look at any of the companies that are quintessentially Thielian, they all have this kind of through line of just like personal and professional beliefs. And I think that if you can establish yourself in a very strong way with that kind of voice, to your point, the right types of people will come, or not the right types of people, but the people that you probably want coming towards you are that's just a good way to attract them. So totally on the same page.
If we were to take that framework that he has in terms of his personal beliefs, he also has turned that into very contrarian bets in terms of investments themselves. How do you think about consensus versus contrarian when it comes to early stage investing? In one regard, you maybe want to do something different and be right very early on, but the whole framework of asymmetry is that eventually the contrarian thing has to become consensus because that's where the value ends up coming. So how do you kind of think about, hey, I want to do something that is different and find these outsized returns, but also it has to be something that maybe eventually gets to a consensus belief?
Sure. Yeah, I think that you have to just have like a really strong perspective on the macro and micro, and be willing to take like strong bets on that. To your point, like the only value that's really accrued, like to me, every time I raise a fund and deploy it, I want to raise and deploy a 10x fund, right? And there's no way to get to a 10x fund purely off consensus. You have to take these kind of outsized, weird, sort of like non-obvious bets, because if you were to only take the obvious bets, the market is pretty efficient and they're probably priced pretty well. And so you're going to see much less of like this outsized return to you and your investors. And so for me, what I always try to balance is like, hey, there's a certain amount of things that I have to do that just has to make sense. Like it has to fit the boxes, check the boxes, because my LPs are institutions, and like me doing these random one-off things is not necessarily what they put money into me for. And I think that that's also a thing that like you have to be very respectful of, is like, at the end of the day, if you run a fund, you are like beholden to, endowments and pensions and all of these different things. And you have to respect that. You can't just like fuck all of that off with, just crazy ideas. And in some instances that works, but in most instances, I think that there's a fine line of balance between taking these early bets on these non-obvious people while also being able to be somewhat clairvoyant into the future of like, hey, if they get to 0 to 1 and they hit X, Y, and Z milestone, this actually does probably become interesting for a founders fund, or this does become interesting for Sequoia or an Andreessen or whoever else. And so it's being sort of like having some level of premonition of, hey, do I think that X founder with X, Y idea can basically become a little bit more consensus over time, right? And so I think that understanding what becomes more consensus over time and who does it become more consensus to becomes like a very important framework to have as a seed investor, because you're really betting, as a seed investor, you're really betting, hey, this idea becomes more consensus to these large institutions over time. And so, and at a point, like it goes from consensus to like a Sequoia to like a consensus to a Co2 to a consensus to like a T Rowe Price, right? And every step of the way, you have to understand like, hey, does this make sense for them? And so, I think half of it is coming up with these new and novel ideas and trying to capture value early. And then the other half of it is understanding how do these ideas evolve into something that's more palatable over time to a larger audience.
When you see these the contrarian ideas, they are usually started by people who wouldn't pass a normal job interview.
Sure.
How do you kind of separate out who's crazy versus who's just different and is necessary to build the company? And I say that because through the years I've met and sometimes even invested in people who had these kind of insane ideas that you're like, man, if this works, this would be highly, highly valuable. But then 6 months, a year, 2, 3 years down the road, you're like, okay, but this isn't the person who's going to be able to pull this off.
Sure.
Versus other times, it is the person who can pull it off. And it's one of the hardest things I think to do early on when you don't have a huge, data set to kind of evaluate. How do you do it?
The way that I do it is like, and to your point, I like to find people that are unhireable in other places, like could never work at like an insurance company or like a law firm or whatever, specifically because they're so obsessed with the idea that they're working on that they just would never be able to work anywhere else. Like, for instance, we kind of touched on it a little bit earlier. I have a friend named Augusta Storico. He's building a company that's supposed to like be a platform for weather and modulate weather in a bunch of really interesting ways. You talk to Augustus and you see how passionate he is about things like rain and things like hurricanes, and you realize like there's nothing else for this guy. You know what I mean? Like there's no other thing that this guy could do. This is kind of like, this is it. If this doesn't work for him, like it's, I don't know what happens next, because he's so passionate. He has so much knowledge, and I don't know where you kind of like look at these people who are like, oh, you're clearly taking an all-in bet on this. like everything that you're teaching yourself, your network that you're building, the things that you spend your day to day on are clearly oriented in such a specific way that it's like there's no like plan B. It's literally just you are doing this, and if you're not doing this, you're finding a completely new plan A. Like you're scrapping everything that you have going for you and like really literally starting all over. And so I think that I love those people who seem all in on ideas, who are like, yo, if this doesn't work, I have no idea what else I have left for me. There's no like I just end up at a law firm somewhere doing like corporate law or whatever. It's like, either this is going to work or I'm back on my buddy's couch figuring out the next idea. And I really like people who are all in like that. And I think that if you really have sort of an outsized idea that you want to run with, you kind of have to operate in that way. Otherwise, you're hedging yourself at a time where you should be all in.
The last question I want to ask is kind of internal when it comes to these early stage venture capital firms. How do you think about portfolio construction? Some people want to go spread as many small checks as possible and just kind of build this massive index. Other people are like, I want to take 8 to 10 bets and be highly concentrated. What's your strategy?
I think it's probably somewhere in between. I don't love the idea of like having a bunch of, and I think that like if you're honest with yourself at seed and you really do want to be helpful to these companies. You have to be honest with like how much work you're actually able to do. And so to me, it's like much less useful for me to do 150K checks and just sort of index the market, because at the end of the day, you'll get a market return. Like there'll be nothing special about your return. You'll basically just be kind of like in the median of whatever that return profile is, right? I think that to be really effective, especially at the seed stage, you kind of have to take bigger bets with a smaller amount of total bets. And for me, that allows you to work closely with these companies in a way that you can see outsized value returning to you as an investor and your investors in your fund. And so to me, the right number, I have a $20 million fund. It'll probably end up with 30 to 35 companies at a median check size of called 600 to 750K. And that'll probably be, where I net out. And I think that is enough ownership up front where you're not getting, you probably still get crazy diluted, but at least through that dilution, you'll still end up with a healthy amount of percentage. And you're not spreading yourself super thin where you're trying to help 50 companies every week,
And when you see, we talk about the media stuff, but I guess like also if you're writing those size checks early on, you're below the threshold where it's highly competitive. How much of the deal flow is coming inbound on Twitter versus kind of personal networks of individuals versus large institutions, other VC firms that are kind of sending you deals?
Yeah, I think that I'm really lucky in the sense that I seem to be pretty neutral, and most people find working with me totally fine. And so I'm lucky in the sense that, and I'm sure you have this too, since you have quite a big platform yourself, is I just have an email that's like latently available for founders to send me whatever. I probably get anywhere on the order of 75 to 100 deals a week. Maybe 4 to 5% of those are really interesting and worth diving in more. What's also great about having a platform, as I'm sure you know, is that the cold outreach conversion percentage is quite high. I can reach out to founders, and at the very least, they'll be like, "Who the fuck is this random meme page? Asking about my company." I might as well see at the very least what's going on here. And then when you can articulate like, "Hey, I actually take this quite seriously. I'm a student of the game. I have a lot of value and people that I think that I could be able to provide to you." Then it becomes a little bit more of an interesting conversation. And so, yeah, I think that what's the right balance for me is working closely with a bunch of the funds in the Valley, who I'm very lucky to work with quite closely, as well as trying to find net new things so that it never seems one-sided in that exchange, right? So it's not like, oh, I'm just taking deal flow from Sequoia every single day and they get nothing back. It's, I give them one thing, I send them one thing, they send me one thing, and we just go back and forth until, hopefully we've cross-pollinated a bunch of stuff. And I'm really into being collaborative in that kind of way. I think that there are some people who are like not weirdly, I understand where it comes from, but they're very focused on just like accruing all of this stuff to themselves. And to me, I think that, over time, you are going to have to work with these people in some capacity. So it might as well be earlier than later. And making sure that, you are sorted in a good way when that time comes.
That makes complete sense to me. It sounds ridiculous to ask, but where can people find you if they want to send you deals?
Yeah, you can just any social media platform. You just type in "praying for exits." I'm sure I'll pop up, and if not, GP like general partner at Praying for Exits is another great place to reach me. I'm very active there, so yeah, reach out.
Awesome. I appreciate you doing this. I learned something, which always makes these great. And I think that you are helping to pioneer a whole new model where your identity doesn't matter nearly as much as the quality of your work, and your kind of value of the pseudonym actually is driven by the word of mouth, right? You help one founder, they go tell everyone else, and then all of a sudden you became known as a super high quality, high value kind of addition to a cap table. And then there's this element of like everyone's still a kid at heart, and likes the idea of let's get the pseudonymous VC on the cap table as well.
Totally.
Awesome. Well, all right. Thank you so much. We'll do it again in the future.
Yes, thank you, man. I appreciate it.